So the risk of a double dip, you said, in the rich world is real. For MF Global, what are the chances and the probability of that happening right now?
I think at the moment we are still looking at a base scenario for the global economy that is still bearable, one with very weak growth and Europe muddling on, but Europe not entering into recession, in the US neither. In that base scenario, I think in all the situation will be bearable for Asia. Where the problems will get in is if there were to be a major event in Europe, or if the US goes back into a double dip, then I think the impact on Asia will be large.
When you say a major event in Europe, does that mean a Greek default? Is that what we're talking about?
I think that could be Greece defaulting in an inorderly way, in a way that is not planned, and where things escalate and where policymakers lose control of events.
Okay.
And I think the other major source could be, as you already indicated, problems in the US, which is still not out of the woods either.
Right, but that's not the baseline scenario for MF Global, right?
That's not the base scenario for us. It's also not the base scenario for most international forecasters, for instance, the IMF and others.
Yeah.
And so we are looking at a base scenario which is still bearable for Asia, but with the odds of things getting worse in the rich countries very significant. And if things were to go worse in either Europe or the US, that will have a much larger impact on Asia.
Well, let's talk about the state of health for China right now, because we got the state's PMI numbers over the weekend, which showed that it's actually doing a little bit better than what HSBC came out with their PMI figures on Friday. So which of these PMI numbers do you actually put money on? I mean, which one has more credibility in your view?
I think they both they are both helpful. The NBS and the national figures tend to have a stronger weight for larger companies, and also for more domestically oriented companies. So it's useful to have a picture of both. Actually, the numbers that came out over the weekend are not all that good.
Oh, really?
If you adjust them for seasonal effects. So there has been some decline in the overall number. Also, there has been a decline in domestic orders, and that is indicating, in my mind, that China's economy is still growing, but we are seeing this slowdown also in China. In China, still, the economy is still growing significantly, so I'm not too worried about it.
Well, the HSBC numbers came out on Friday, and I think the headline was that this was a third straight month of contraction in terms of manufacturing, which really, scared the market. Would you say that that is exactly what's happening in the manufacturing sector, at least in China?
No, I would say that that's not. There is, when you compare the PMI numbers, when you go back in time and you compare the PMI numbers with the hard economic data like industrial production, then a PMI in China below 50 doesn't mean that manufacturing is contracting. It means that manufacturing is below trend growth. The trend growth in China is very fast. So we are still seeing an expansion in industry. It's just that the expansion is below trend.
Okay, so it really freaked out the markets, though. But what about China's growth? I say in 5 years' time, because I think our global investors poll is pricing that below 5%, which is pretty scary. We have a country of 1.3 billion people, right?
I think when you look at China over the coming 5 to 10 years, we are seeing a slowdown in medium-term growth, because most of the fundamental growth drivers like productivity growth and demographics, they are pointing to a slowdown, but the slowdown is gentle. I think that China should be able to continue to grow at say, between 7 and 8% in the coming 5 years.